This is Luis Alvarado. I hope everything is going well. And today we're going to have a short review about the accounting and main, insights or main principles of the accounting. We will also talk about an introduction about what accounting means, the main accounts, the financial statements, and some other things that will be necessary for you if you practice or if you are an accountant or if you want to get familiar with accountancy. Okay, so let's begin by understanding what is accounting or what are the fundamentals of accounting and also the main principles. Accounting consists in let's say that a list of transactions that are happening in the entity. For example, sales, expenses, I don't know, paying a payroll, receiving cash, et cetera, et cetera. So everything that happens in the entity will be recorded through a journal entry. We're gonna see what a journal entry means. We're gonna see what a debit and credit means. For now, we just gotta understand that accountancy or accounting, it's related to recording the transactions that happen during a period. In this case, it could be a month or it could also be like a year, semester, quarter, whatever. Okay, let's go through the trial balance. What is the trial balance or how it is integrated? Well, the trial balance is a statement of all the ledger, including all the ledger accounts, with the closing balances. Let's say that this trial balance includes all the accounts that we have on our chart of accounts we are using on a specific period. Let's take January as an example. And it normally includes the initial balance, debits, credits, and a final balance. Okay? It's important to remember that the debits and credits in the trial balance, they should be the same. So if you subtract one from the other, the result should be zero. Okay? How do you prepare a trial balance? Well, that report is normally given on, let's say, on our ERP, on our accounting system. But if you want to have a little knowledge about how it is integrated, let's say that it comes from the general ledger, which is integrated by journal entries. What we mentioned before are transactions that happen during a specific period. So a trial balance is a summary of those transactions that happen during the period, and it's just showing, let's say again, initial balance, debits, credits, and final balance. Good. Let's explore the nature of the accounts, okay? And for this, I would like to take an example. I would like you to, if you can draw on a piece of paper, the following word and letters. ALRI. ALRI. ALRI stands for A, assets, L, liabilities, E, equity, R, revenue, and E, expenses. I know that we got cost of sales, cost of goods sold and everything, but let's go this way. Let's take it as E, as expenses. So if you have already wrote those letters, I want you to make a division. Let's imagine that you write A, and then you write like a line or like a slash or a line. And then you write LE, liabilities and equity. And then you can write separately R, another line, and E. Remember, revenue and expenses. Okay, so the letters that are outside, okay, of those lines that we drew are the assets and the expenses. So those are normally on a debit balance. Let's remember that debits are mainly placed on the left, while credits are on the right, okay? So assets and expenses have normally a debit balance. So how are we going to increase those accounts? By debiting, okay? If we debit an asset, we increase it. As an example, let's mention cash and equivalents. Let's say that we receive a deposit from a customer. So the journal entry will be something like debiting cash and crediting accounts receivable, okay? If you notice, we debit on the left and we increase the cash accounts, okay? Good. So going back into our example, A stands for assets and E for expenses. If you debit those accounts, they're gonna increase, okay? In the middle, we have L, E, and R, which stands for liabilities, equity, and revenue. Those accounts normally manage a credit balance. That means that whenever we credit those accounts, they're going to increase. And let me give you one example for each one of those. Liabilities. Let's say that a vendor provided a service and we have their invoice, which we're going to record. So the entry will normally be something like debit expenses, we increase the expenses, and we credit the accounts payable, okay? So that way we're gonna be increasing our debt by increasing the accounts payable, credit, okay? If we go to equity, well, we could probably say that shareholders invested capital in our entity. So that means that we're going to debit cash because we have received a deposit in our bank accounts. We increase it, but we also have to credit capital, okay? Good. If we credit capital, that would be increased. Let's go with the final one, revenue. Let's say that we now have sales. We have transformed a product and we're gonna sell it to a customer. So our normal journal entry would be we debit AR or accounts receivable, and we have to credit the sales or revenue accounts, okay? So just keep that in mind. Keep that word Allery that you wrote, A-L-E-R-E, Allery. So the ones that are outside are normally debited. The ones that are inside are normally credited. It's not in a specific rule. You may credit asset accounts. For example, when there are payments to vendors, you have to credit the cash account. When you are depreciating an asset, you may credit an asset account. And there are some other examples, okay? Good. So it's important to know the accounting cycle, understand the cyclical nature of the accounts involving transactions, journal entries, and so on. Okay, so we have already talked about the debit and credits in accounting, so I guess we can skip this part just to go a little bit further. Journal entries and their importance. It's important to know that a journal entry will record the transaction that happened during a specific time or period, okay? There are different types of journal entries, such as compound journal entries, adjusting journal entries, and other ones, okay? In this case, we're gonna talk about the recording transactions. Journal entries serve as the first step in accounting cycle, providing an organized record of financial transactions. This means that if a transaction happened on day 1 or day 5, it should be recorded on that day, okay? It should not be on day 30, the 27, because we need to have an order, okay? If you check the bank statement, if you receive a deposit on day 2, you should see the same in your accounting, okay? That can make our lives easier, so you can track and match and integrate a working paper that will be very helpful for an audit, okay? It's important to mention modern practices such as digital transformation, okay? We already have a lot of tools and that can be helpful for recording journal entries, okay? Let me give you an example. Let's say that you have a spreadsheet with a normal journal entry that includes a lot of lines. So posting it will take you, I don't know, let's say 5 minutes, 10 minutes. And if you use like an automatic tool, that will probably take you seconds, okay? So it's really about understanding how does accountancy works, what are the journal entries and how do they work, but also then implement tools that can be helpful to facilitate your work, okay? Good. One entry that I didn't mention is also the reversing journal entries, which can be posted in one period and then be reversed in the next one. Okay. Let's go with the financial statements. Why are they important to formulate and also to know them and understand? Let's say that the balance sheet provides a snapshot of the company's financial position at a specific point of time. It can be in a month, January, February, March, or it can also be a year, okay? It's basically displaying or showing the assets, liabilities, and equity. Normally, the assets are placed on the left side, while liabilities and capital are placed on the right side, okay? And income statement is normally showing revenue, cost of goods sold, and expenses. So whatever you sell, whatever if you're selling services or goods, that's gonna be on your income statement. If you have expenses such as electricity, payroll, and other charges, you will see them in the income statement. In your balance sheet, you will be able to see your assets, such as cash and equivalents, accounts receivable, and others. Those are resources that you're going to have available to perform or develop your activity. Liabilities are probably going to be placed on the right side, and they basically represent obligations that you have and you will be paying to someone. It's either a vendor, supplier, or the bank if you acquire a loan. Okay. There are some other, let's say, the principles of the income statement, such as revenue recognition, expense allocation, and profitability analysis. So let's go by revenue recognition, okay? There are different methods that are used to recognize the revenue in the income statement. Some of them are when you transfer the risk of the products. It can be either when it goes outside of your warehouse or when the customer has already received it, when you bill it, when it's on the border. There are different types of revenue recognition. Expense allocation allocates and categorize expenses accurately to reflect the financial health and operational efficiency of an organization. Okay, so you must place them where they go. Okay, if they are related to cost, they go there. You can also allocate them per, let's say, per department, such as this is for human resources, this is for taxes, this is for engineering, whatever. Okay, good. Let's go. Well, we have already talked about the balance sheet, about the asset classification, liabilities, and equity. So I guess we can miss this part. The only thing that you need to understand and be very clear is that the assets normally have a debit balance. Okay, they're normally positive. There can be examples of negative balances such as bad debt, depreciation, or accumulated depreciation, but they're normally on a debit position or debit balance. While liabilities in equity, they're normally on a credit balance. Okay, those are debts that we're gonna pay or obligations that we have in the future, such as I say, vendors, severance, payrolls to be paid, taxes payable, and some other examples. Well, thank you for watching. I guess that's all for now. I had some examples. Let me see if they are available and how much time do we have left. This is an example of a balance sheet. So let me make it a little bit bigger. And here you can see the accounts that are normally related, for example, in the assets. Let's say that the assets also have a classification between current assets and long-term assets or fixed assets. So they're gonna be placed depending on how can you dispose of those assets. For example, the cash is normally money that you have in your bank and you can use it whenever you want. Okay, we can also have the inventory that you can sold very quickly, while the fixed assets are let's say assets that you're not expecting to sell in a short period. You're expecting to use it for a long period of time. Okay, so that's why their classification, ones go first and then the other ones and then the ones that are on the long term. And here we had an example. I guess I have already explained it. So when you collect money, you debit the cash and you credit the accounts receivable. Okay, and if you are paying to a vendor, you will normally credit the cash and debit the accounts payable. It's important for you to remember or to know that debits are normally seen as DR and credits are normally seen as CR. Okay, good. So you may want to go through this file. I'm going to share it in the group so you can have it available so you can check the examples. I made six examples for you. You can also think of other ones. This is the example of the balance sheet. It's in English, and you may also see a Spanish version just in case you want to translate or get the logic of the accounts. You may take a look, but I really recommend you to get familiar with the English terms. You can also write them down in a sheet of paper so that you can start getting familiar on how to write them and listen to the pronunciation. So I hope this was helpful. Thank you so much for watching. Take care.